Very good morning, professional friends. On behalf of Annanagar CPS Study Circle, I'm yours Hemant Kumar coming here. So, welcome to all this wonderful Sunday meeting. So, let us start our CPS meeting as usual with our ICM motto. Please give me a minute time to start.
यशस्सुप्तेषु जाग्रति यशस्सुप्तेषु जाग्रति कामं 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 पुरुषो निर्मिमाणः तदेव शुक्रं तदेव शुक्रब्रह्मा तदेवामृतमुच्यते अस्मिन् लोकः अस्मिन् लोकः सर्वे तदुनाद्यपि एतद्वैता 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 एतद्वैता.
Thank you very much. Friends, once again, welcome to all for this Sunday special CP session on important changes in the income tax return forms and practical issues. And it's a privilege and a great pleasure to introduce to the floor our own brother and friend and very down to earth like father. So our good friend, Dr. C.A. Abhishek Murali, a practicing chartered accountant at Chennai, who is currently a partner of Victor and Grace & Co. Chartered Accountants. And glad to introduce friends. Probably we not have a physical meeting in the SARC premises in the Brahma Hall. So it's my pleasure to introduce our great, young and energetic and vibrant secretary for SARC and youngest secretary of SARC for the current period 2021. He also All India first rank holder in ICMA strategic examination, CMA, All India 17th rank in CMA final examination. He also secured All India 5th rank in international taxation examination conducted by CIODA. Dr. Abhishek Murali is the youngest regional council member, as you know, and we can see in the future of SARC, the young and energetic chartered accountant and vibrant person. So, apart from that, he is expert in direct taxation, international taxation, legal experts, valuation, due diligence, and mergers and acquisitions. And in fact, big list is there. And in fact, in this COVID period, he is we can say that he attended more than 500 seminars. And glad to say that 2 lakh viewers in the service webinar creating awareness about various benefits and incentives available to them launched by the government of India on various topics. So why not? We should not miss the opportunity to hear from Mr. Abhishek Murali. So we are glad, sir, to welcome you for this wonderful session and update and upgrade. And last one day, we are seeing a lot of changes in the income tax return filing, doubts on introducing the parliament and changes what is going to be happen. So without wasting furthermore even half a second time, straight away over to Abhishek Murali to take it and educate us for the next 1.5 hours. The last half an hour will have question and answer session. Over to Dr. C.A. Abhishek Murali ji. You can unmute and speak. You can unmute.
Am I audible now, sir?
Yeah, you are audible.
Yeah, I think only host can unmute, so I was not able to do it. Thank you for unmuting me. And of course,
you can unmute, Abhishek.
Yes, I'm unmuted, sir.
Yeah, go ahead.
So a very, very warm good morning to all the participants who have joined in today, to our convener, CA Hemant Kumar, my good friend and the ever smiling personality he is. So he is kind enough to invite me, and I said, when I'm invited to Annanagar study circle by especially by Hemant, I can never say no. So immediately I accepted. I am very, very
Thank you
happy
very
to
much.
be here with all the members here. And you have joined in such good numbers on a Sunday morning at 10 a.m. Normally, we all prefer Sunday morning. You have to relax, take rest, but you have chosen to get some professional empowerment. So I'll try to keep the session as interesting as possible, because the topic itself, as rightly chosen by CA Hemant sir, is a very, very apt topic. And I'm sure now many of you will slowly be going back to office, or you will be working from home. Your clients who have started sending details to you for their income tax filing, because in their minds July already over, so already it's late for them. Like that, they'll have a mentality. So therefore, we have all started now. The return filing season has very much begun, and a lot of work is going in. So in this perspective, knowing what are the changes in the ITR is extremely important. You see, this year, like every year, there have been changes in ITR. But unlike every other year, this year, not that many changes we have. Comparatively, actually, lesser changes we have this year in the ITR. But, but please note, every single change which has come in the ITR this time is a significant change. It's a very, very important change that will impact how you need to plan your work. Why I'm saying that, you'll understand in the foregoing slides. It is not about only filing the ITR, it is about planning and collecting information also now. And more importantly, the second aspect, I'll not simply restrict this session only to the pure changes in the ITR form. We need to understand what contextually these changes mean. Traditionally, many of us or many clients, they have been following certain practices that may be healthy or unhealthy, whatever their personal reasons may be. But it remains that they were following certain practices, and they are not aware of certain new developments which have come about in the Income Tax Act. So today, so many new developments are there which are going to impact how you need to file your returns, what and all you need to include when filing your income tax returns. So what are some of these key developments first? The first one is in July, the CBDT announced a signing pact for data sharing between the indirect tax authorities and the direct tax authorities. So now, by merely typing the PAN number or merely typing the GST number, the income tax authorities can immediately get the details, whatever you have submitted to the GST authorities. I used to remember when I was going to one client very, very long back. I was still an article, I think, at the time. And at this client, when I was asking for details, they were giving me the details. Then I said, sir, can you show me your excise records and your VAT records? I want to reconcile for this with the records over there. Suddenly that accountant, he said, ஏப்பா அந்த வேட்டோட financials எடுத்துட்டு வாப்பா. I said, sir, what is VAT financials? What do you mean by get to VAT financials? He said, no, we actually maintain separate set of accounts for VAT authorities, separate accounts for income tax authorities. I was very, very shocked. I said, why you have maintaining separate accounts? Everything is one only. You know how we are maintaining separate accounts? And no ICDS and all at that time. So why they are doing all this? I was asking. So then it came to light that basically the direct tax authorities and the VAT authorities at the time, they did not share information at all. So if I say to income tax, my sales is 100, and if I tell VAT, my sales is 60, nobody is going to check with each other. These people will accept 60 and process. These people will accept 100 and they will process. There will be no in between, no communication, no reconciliation, nothing. So traditionally for many years, this was being done. Later on, of course, we knew that if the information was sought for, it was normally given by the authorities, maybe little late. If direct tax writes a notice to a CBEC saying that, can you share this information with me? They are not going to respond in 2 days, 3 days. They normally take a few months to respond. So their purpose was lost. Now, however, please note, since July 2020, there is an official agreement. There's an official data sharing agreement. That means they have a commitment to each other now. Earlier, there was no commitment. It was purely on a gentleman agreement. I asked for details. Hopefully, you give it to me because we are both government. Like that, there was a understanding. But now there is an agreement. There is a pact for sharing of information. So therefore, please be careful. I know many of us do not follow this practice where we keep separate accounts for indirect tax authorities, direct tax. But let me tell you, especially in the north, and many cases that I've handled at the tribunal, I've done so many cases, not only in Chennai, I've done in Bombay, Delhi, etc. I've heard so many cases where the data is different for different set of authorities, and reconciliation normally is never done, or suddenly it is done at the stage of appeal and there is a lot of confusion. So if you are someone or your client is somebody who's following this sort of approach, advise them that going forward that and all is gone. Everything is going to be checked. It's a very simple process. They type the PAN number or GST number, entire data is going to be captured. So therefore, please be careful and ensure that your clients comply with these sort of terms and conditions. The next one is a very, very recent development. It came out hardly 15 days back. Maybe you might have read in the newspaper or you may have followed the CBDT circulars, where now the CBDT have entered into an information sharing with banks, with the scheduled commercial banks. They have entered into an information sharing agreement. So what I did was I said, I want to pull out the circular. I want to see what actually they said. So if you read the circular, this current announcement restricts itself to that new TDS section 194N. What is 194N? Now, if you put cash deposits beyond a certain limit, if I don't have a PAN card, more than 20 lakhs, if I do, TDS will be deducted. If I have PAN number, then more than 1 crore, TDS will be deducted on cash deposits. So they have said for ease of bulk uploading of information, we have created a new sort of information sharing with the banks. But please note, henceforth, going forward, the agreement is there. They just have to slightly expand the clauses. Right now, they have said only 194 in. But going forward, they may say withdrawals also you share details. How many bank accounts you have shared details. Many of you are aware that you have clients who don't disclose their bank account details. One client who had come to file their returns with us, I remember going through the details and I asked them, sir, have you opened any new bank account? Because only 2 accounts are there, your old accounts, and your transaction seems to be less. Is there any new bank account you have? Sir, no, Abhishek, you show these 2 accounts enough. I said, sir, it is not an option. Government is not giving you an option. You show these 2 accounts, you show these 3 accounts. Everything you have to admit. But many people, especially salaried employees, if you see all these website clear tax and all that which do the filing, or income tax practitioners who don't have expertise who are filing, what they will do is they'll take form 16, just a copy paste, whatever then form 16 they'll put and they'll file. It's a very, very horrible approach, but many people are doing that. They won't even check if I'm getting salary. Obviously, my salary is going to get credited in a bank account. So if it gets credited in my bank account, even if I withdraw my entire salary, at least 1 rupee savings bank interest will be there. But income from other sources will invariably be zero for 90% of these salaried cases. So therefore, it is very clear that many people are not admitting their incomes properly. Savings bank is a small amount. Up to 10,000 exempt deduction is there. The senior citizen up to 50,000 also there. But not that till now. People are not even disclosing major bank accounts where major transactions are happening because they have experience. I know bank will not give the details. I know that they will not seek the details from the bank. So I will not even disclose it. So that sort of approach was very commonplace. It is still commonplace. I am not talking about the ancient practice. I am talking about a practice that is still happening today. With this new agreement that has been entered into with banks, it's only a matter of time before the income tax seeks the details of who and all, what and all bank accounts are maintained, what are the PAN numbers of the people who are maintaining the bank accounts. They simply have to cross check. If you have not disclosed or you have shown some wrong figure or you are lying, etc., immediately, it's a matter of seconds. It's a computerized process where immediately they'll be able to call out the information and you will 100% get a notice in these sort of situations. Please be very, very careful and ensure the disclosure is done properly, especially now going forward with the bank related information. Now let us come to ITR, the very purpose of this section or this session is to understand the changes and purposes of the ITR form. So let us start out by understanding what are the purposes of each ITR form. Almost every ITR form is the same. ITR 1 is for individual with salary who doesn't have capital gains, etc. ITR 2, in case you have capital gains but no PGBP, you can file an ITR 2. ITR 3 is if you have any business, ITR 3. ITR 4 is for presumptive basis. ITR 5 is for partnership firms, etc. ITR 6 is for companies, and ITR 7 is for trusts, NPOs, ETG related organizations, etc. All of those companies will file an ITR 7. Now, more or less, this is the same as last year, but very, very few interesting specific developments we need to touch. That relates to ITR 1. So why I am talking about ITR 1? You see, ITR 1, the purpose for individuals being a resident other than not ordinarily resident. That means what? He has to be a resident and an ordinarily resident. Only if these two categories are satisfied can he file under ITR 1. Okay, that is okay, straightforward. Next. Ganesh sir, I think you are unmuted. Request you to please mute. I request participants, request you to please mute your microphone. Sometimes the disturbance.
I request Abhishek to unmute it and speak. I muted all. You unmute it. I request.
Am I audible now?
Yeah, you go ahead.
Okay.
Sorry for interruption.
No problem. So, having total income up to rupees 50 lakhs, that also clear, no change. And having income from salaries, okay, we understand. One house property, please note this, it's a very, very important point. One house property. Why I am saying this one house property? I'll give you a practical scenario of what is happening. Now, I am an assessee. I have two houses. One house, I've let it on rent. I'm getting income of, let's say, 1 lakh rupees. After all deductions, I'm getting 1 lakh rupees at the end of the year. Taxable income from this house. Next house is a self-occupied house. I am staying with my family in that house. So now, when you take the ITR form, I have to disclose both houses. But what am I doing? We all know ITR 1 is a simple form. It does not take that much time to file. You don't have to collect too much information. You don't even have to disclose address of the house, etc. So all you have to do is fill a form. Maximum, if you have done the computation, it should not take you more than 15 minutes maximum. 15 to 20 minutes maximum. Should not take you. So most people, they prefer to file an ITR 1 purely from a ease of doing filing point of view. But suppose I have two houses and the scenario I gave you. What many people are doing today, I am not talking an imaginary scenario. I have seen this also, where you have two houses. I'm getting rent only from one house. Other house is nil because self-occupied property value is nil. So when I'm filling ITR 1, I admit income from house property 1 lakh. I put and I file the return of income. Now, is this correct? Now you'll say, yes, it is correct. I am not escaping income tax. What is my taxable income from house property? 1 lakh only. Yes, I'm admitting that. All I've done is I put it in ITR 1. I should have shown the other house as nil. I have not done that. But everything is correct. Tax paid is correct. TDS is correct. Income is correct. Deduction, everything correct, sir. So why, what is wrong? Why can I not file? Ladies and gentlemen, please note here. This is a very, very important point. Till now, even though ITR 1 stated the same thing last year also it said one house property. But in the example scenario that I gave you, if you had filed ITR 1, income tax did not send any notice. They used to accept and process the return. They were kind enough to process the returns. But now they have issued a specific direction. This is not something which is there on the record. It's an off the record communication, internal communication, and I'm sharing it with you because of the interaction that I've had with the officials, that this year onwards, they are going to be very, very serious about tackling issues of the wrong schema, where I should have filed ITR 2, but I filed in ITR 1, maybe for ease or maybe to evade or whatever reason may be. Last year, they did not, till last year, 90% of the cases, as long as the figures were tallying, they were happy. They did not cause any issues. This year onwards, they have taken it very, very seriously, saying it will be treated as an invalid return, as if you did not file the return at all. You will get a notice. You will be given less than 15 days to make the correction. And in that 15 days, you have to correct and file the return. If you don't file it, invalid, as if you did not file the return at all. One more thing, suppose I file it. Let us take the same scenario that I gave you. I have two houses. What I have done, one house, self-occupied house property, I will show nil in ITR 1. Other house, 1 lakh I've got. No, that 1 lakh I'm showing in income from other sources. I'm not showing in house property. I am showing it in other sources. So I've admitted it and I've disclosed it in other sources. Now I'm getting notice from income tax saying we got information from property tax details that you have two houses in your name. Why you have filed ITR 1? Please update and file. So what I am doing, I say, okay, fine. I will file in ITR 2 now. I'm filling out the ITR 2. I put this house property from other sources. I transfer it to my income from house property. Now, at that time in other sources, I didn't know standard deduction is there. So now in house property, automatically system is computing standard deduction for me. So I'm getting a benefit. Whatever eligible as per law only I'm getting. Whatever eligible as per law, same thing I'm getting. I'm processing it. It is accepted. Here, please note, it will be rejected because when you are curing a defect, when it's saying that it will be treating it as invalid, please make the change. There should be no change in your income, increase or decrease. There should be no increase or decrease even in your 6A deductions. Please note, suppose I'm filing a return, then suddenly I realize it is invalid. I'm getting notice from department. After the notice comes, I realize, okay, I have not claimed 80D. Client did not give me mediclaim certificate. Let me put it now and correct it. I will put it in the, when I'm correcting, rectifying the defect. Let me include that 80D and file it, you may think. Perfectly valid. 80D proof is there. It is within the date. It is within all the limits. He is paid by check. Everything is there. Can I claim it here? Please note, as I told you, any change in your total income or any change in your chapter 6A deductions, straight away it will be rejected. It will be rejected. You have to correct that defect, file it in the right schema. I have to put it in the right schema. It must match with whatever I filed before, even if it is wrong. Even if it is wrong, it has to match with whatever I filed before. Then after that, if you want, you apply 154. Put a rectification under section 154, or you put a revised return and then you correct it. If you have time, do a revised return. If not, you do 154. But you cannot change the figures. Please note, so many chartered accountants, I am doing appeal cases for them where this issue is there. Simple cases, salaried persons. Many of you are aware. I can see some names in the participant list. Many of you who refer your cases to me, you will all be aware of how when it comes to CPC related issues, if you submit a response, you will not get a response after that. You can go to that work list, you will get an issue. You can type out all your responses, whatever arguments you have, click submit. Does that issue get resolved or does it remain hanging in that website in the income tax portal? 95% of cases, it remains hanging in the portal. Suddenly your associate will be due a refund. They'll say, hold the demand, I'm adjusting against your refund now. Then you will have to explain, saying, no, sir, I've already explained. I responded online. You only did not respond after that. It is still pending from your side. My side, I've given everything. I've given the proof. I've given my response. Why are you reducing my current year refund against that, sir? What will happen? Nothing will happen. It will be like that only till it is transferred to your physical assessing officer. And ladies and gentlemen, you are all aware now, we are in a e-assessment era. There is no physical assessing officer now. If it goes for assessment purposes, it will go to somebody else somewhere. So 154 and all is not going to be simple anymore. It is a more complex process. So please remember, innumerable cases that I'm doing, innumerable number of cases I'm doing in appeals on simple issues. In fact, 25th September, you may be aware, is a cutoff date for your e-appeals. If you have an appeal pending before your CIT appeals, by 25th of September, if that appeal is not closed, that is order is not passed, then it will transfer to e-appeals. So that is the current schema or the current plan that they have. So when that is the scenario, I'm telling you, many of my appeal cases, I'm rushing to try and file because it is easier to explain physically before someone, because we don't know the e-appeals, the procedure is yet to be notified. So therefore, when that is the scenario, let us go back to the very origin, that is the filing of the ITRs. Ensure that you are filing the proper schema and the proper ITR. Now, coming same house property issue itself, I'll give you another practical issue that many people face. I have 3 houses. First house fully in my name. Second house fully in my name. Third house, I'm a 50% owner along with my wife. I'm a 50% owner. So for me, you will say, Abhishek, you have to file ITR 2 only. Okay, I'm clear. If I have business income, like let's say, whatever partnership business, then ITR 3. But my wife's name, suppose she has to file only ITR 1. She does not have to file any other ITR. And she has 50% house property in her name. Please tell me which ITR she needs to file. She only has salary income. It is within 50 lakhs. She has only one house property that she is owning with me. She is having other sources, very meager amount, let's say savings bank interest. So when this is the scenario, which ITR form does she have to file her return? The answer seems quite easy. We have to file under ITR 1 only. She seems to have satisfied all the criteria that is relevant over there. Wait a minute. Everybody, please wait a minute. It might seem simple, but it is not, because they have clarified where there is a co-ownership. Where there is a co-ownership of house property, you cannot file in ITR 1. You must file only in ITR 2. Where there is co-ownership in house property, you cannot file in ITR 1. You must file in ITR 2 only. Even if all the other criteria are satisfied, she has only one house property. Even in that scenario, you have to file in ITR 2, even though it is a co-ownership and single property. Even if you have 99% share me, 1% share only your client has. Even if they have 1% share, it is co-ownership. Please remember, you cannot file ITR 1. Straight away go to ITR 2. It's a very, very important point. Another very interesting development is that ITR 1, they have now said, if you are an individual who is a director in a company, I'm not a director, okay, maybe it's restricted to few people, or you have invested in unlisted shares. If you have invested in any unlisted equity shares, or you hold any unlisted equity shares, then straight away you cannot file ITR 1. So many of you must be shocked. I'll tell you why. Many of you may think, why am I mentioning this point? It does not seem that relevant. Please note, many of you will have clients, so many associates. You won't be aware. Many associates, they would have started a business at some point of time. At some point of time in their life, they would have started a business. Maybe they've wrapped it up. Now they've come into some other business, or maybe they have got a job. So they are a salaried employee now. So all of us here are chartered accountants, or most of us here are chartered accountants. Almost 50 people are there alive right now. How many of you have done winding up of companies? How many of you have done winding up or liquidation of companies? Forget insolvency code. Before that, how many of you have done winding up of companies? Hardly one or two. Even those people who have done, they would have not done regularly. Very rarely people come, because people will start companies. You will be incorporating companies regularly. But for winding up, people hardly come, because if the company does not do well, they just forget about it and that's all. Nobody ever winds up companies. Why this is important, I'll tell you. Because when you have an unlisted company like that, it is an unlisted company, straight away remember, you are a shareholder. Your client is a shareholder in the company. When he does not wind up that company, he remains a shareholder, even if the company is inactive. Even for 15 years, they are not doing any business. Even if he is not a director of that company, he still holds the equity shares of that company. So therefore, remember, you cannot file ITR 1 with him. You cannot file ITR 1. Now, some of you might say, Abhishek, anyway, everything is correct. Income is correct. He has not sold the properties. Yes, but as I told you, they are going to be serious about this invalid returns thing. If you file in the wrong schema, they will say invalid return. So please be careful. You have to get the information. In fact, one of my clients, this happened. One of my clients, he has been a salaried person for so many years now. Ever since he has joined us itself, he has been a salaried person. So we have been filing the returns for him and his family for many years now. And this year, we have introduced a new checklist in my office where we ask the client, are you a director in a company, or do you hold any unlisted shares? He said, no, Abhishek, all that is closed now. Don't worry about that. So moment he said it is closed now, that means at some point of time it was open. So I wanted to do some checkup. Today, please remember why this is a critical point, and income tax can easily find out. All you have to do is type out that assessee or taxpayer name, and you check Zauba Corp, or you check whether he's a director in some company. If you Google it, not even paid, free search on Google, if you search, you will get a full list of what and all companies that person is a director in and what number of shares he holds, what is the share capital of the company. All these details are publicly available information for free, for free. So for this client, I immediately Google searched and I found that he was a director, not in one company, but in 3 companies. He is currently a director in 3 companies and he holds unlisted shares in those companies because he's not done the winding up. It still remains active company and he is still a director. He has not given his resignation. He's not even aware. He's not even aware that he's still a director there. So ladies and gentlemen, this is a very, very rare point that you're going to start facing common issues with. Please ask every client of yours, whether they are a director at any point of time or whether they hold any unlisted shares. Holding unlisted shares is very commonplace. We may think it is not common, but actually it is very commonplace. In all of these cases, you must file in ITR 2. You cannot file in ITR 1 anymore. These are the most important changes when it comes to the purpose of the ITR form. Look at this. We have not even crossed to the very purpose of the ITR form, but look at the impact of the changes it has. And now the other forms are more or less the same, but there are some common changes which are there in all the forms. So what are the common changes? Let us see. The first critical point before we proceed to the common changes is a new amendment. 7th proviso to section 139(1). All these years, we have witnessed income tax filing. Who has to file the return of income? We all know that it is persons who have income exceeding a certain amount chargeable to tax, or if you have some refund or you want to claim a loss, then you have to file the return of income. We are all very, very familiar with this. It is not something new to us. We all know this fact. But what is changed now? What is different? This 7th proviso brings new conditions, not income-based conditions. It is being expense-based conditions, expense-based conditions. So therefore, what are these conditions that they're having? Qualitative conditions. Who has to file return of income? Even if your income is 0, if you satisfy these criteria, you have to mandatorily file a return of income. So what are these criteria? First one, have you deposited an amount or aggregate of amounts exceeding rupees 1 crore or more in current accounts during the previous year? If your answer is yes, even if you have income 0, you have to file your return of income. The next point, look at point number 3 first. Have you incurred expenditure of an amount or an aggregate of amount exceeding rupees 1 lakh on consumption of electricity during the previous year? Now, I have a question for the participants here. Have you incurred an expenditure exceeding rupees 1 lakh on consumption of electricity? I'll give you a practical scenario. You have an assessee who is a senior citizen. She is staying in Chennai because her family are all abroad, but she has the distant relatives, temple, all of that is in Chennai. So she tells her son, who's in the US, he's a non-resident, he's earning in dollars, he's working in an IT company in the US. She tells her son, you don't worry, the house is in my name over here. I'll take care of, you take care of all my expenses. I'll be here. I don't want to come to the US. So son says, okay, Amma, but whatever expenses you have, I will only pay you. I will only pay for the expenses. You please relax. You enjoy your life. I want you to enjoy your retired life now. So she's very happy. She does not have any pension income, nothing she has. So what does the son do? Telephone bill comes, he makes a payment. Any other bill comes, he makes a payment. Electricity bill comes, he makes a payment. But please answer this question. Electricity consumed by that senior citizen mother exceeds 1 lakh in the year. Now, who has to file the return of income? That senior citizen lady who has 0 income because she consumes the electricity, or does it have to be the son who's sitting in the US? He's a non-resident. He has no income, no assets in India. He's only paying you electricity bill for his mother. Who has to file the return of income? Is it that senior citizen senior citizen in India, or is it that a non-resident son sitting in the US? Who has to file? The person who's incurring the expenditure, or is it the person who's consuming the electricity? So you look at the wording, it is very, very vague. It is very unclear. But ladies and gentlemen, the answer to this confusion lies in the second point. The second point, let us read. What does the second point say? Have you incurred any expenditure of an amount exceeding rupees 2 lakhs or more for travel to a foreign country for yourself or for any other person? Have you incurred the expenditure for yourself or for any other person? My wife and I are traveling to the US. So I'm paying for the tickets for both of us. Have I incurred the expenditure? It has gone more than 2 lakhs for me itself. So I have to file the return, no problem. Next year, what I'm doing, I'm not traveling. I tell my wife, you go and come. You visit your sister and come. I don't have time to come. So please go. So my wife is going to the US. I am paying for her tickets. Who has to file the return here? Does she have to file the return or do I have to file the return? It is very, very clear. The seventh proviso is clear. What does it say? Have you incurred an expenditure of 2 lakhs or more, either for yourself or for any other person? So the person who has to file the return here is whoever is incurring the expenditure. Whoever is incurring the expenditure, they have to file the return of income. So similarly, extending the same logic to the electricity question, who has to file the return of income in that scenario? It is the son who's sitting in the US who has to file the return because he is incurring it. He is only paying the bills. So whoever is incurring, he has to file the return of income. So the US son, he did not have to file the returns in India because he does not have any assets, any other income. But because of the seventh proviso, he has to now file his return of income in India. So some of you may ask, what is the purpose of this section? Is it to tax all those or to make those people sitting in the US as non-residents for them to file the return of income? What is the purpose of this section? Why are they doing this? The logic is simple. You see, there are so many businesses that exist today in India that are run purely on a cash basis. They're run purely on a cash basis. That means what? Their entire income is in cash. All their expenses are also in cash. They are paying rent also in cash. The only few things that they have a bank account for is paying your electricity bills, etc. Because in certain districts in the country and certain states, including TNEB, when your electricity bill is beyond a certain amount, you cannot pay it in cash. You have to either pay it by check or transfer it. You have to pay it by check or transfer it online. You don't have any other option. So when that is the scenario, people for electricity alone, they are using bank transactions. For everything else, it is completely done by cash. So in order to crack down on those people, income tax will collect the department from TNEB. They will come and they'll ask the owner of the house property. You have paid electricity bill so much. Have you filed the return? So they'll say, no, sir, I'm filing regularly. They say, what happened to that house? Why is there so much consumption of electricity there? They'll say, no, sir, the tenant is there. He is staying there. How much rent is paying here? Sir, he is actually paying in cash. So immediately the data will come out because of this. So many businesses operate purely out of the same logic of not paying their income tax or not even disclosing their sales, etc. Because the entire business is run in cash, but they are consuming electricity. Many people are traveling abroad, foreign travel. They pay their foreign tickets. They book it through an agent. They book it through a broker, or they do some transaction where they are able to pay it in cash, but they travel abroad. So now all of this information will be available with the department. And what they are doing is they are giving you an opportunity saying you don't have to file the return if you don't have income. But if you cross these limits, ensure you file your return of income. So please ensure. Many of you may have some families of clients. You might have one assessee who is a client, but his family, they'll be they'll be satisfying all of the criteria that you are seeing over here. They may not be filing the return of income. Please insist to them that now they have to file the return of income. So it is a broadening. It's a broadening of the scope of who and all needs to file the return of income. So be very, very careful over here and ensure you collect this detail. Now the next question, I'm sure many of you will be thinking this, and I get this asked wherever I've spoken about changes in ITR. This has been a common question. It is Abhishek. Suppose my regular assessee is there. For all of them, do I have to collect how much tax they have paid, how much electricity bill they have paid, how much foreign travel they have paid? Should I sit and collect all this? So please wait a minute. You don't have to do all that. The first criteria, first line item, you please see. Are you filing the return under seventh proviso or are you filing otherwise? If you are filing otherwise, that is, you are satisfying the other criteria, your amount exceeds the maximum amount not chargeable to tax, that is more than 2.5 lakhs. If you have income, then you don't have to fill any of this stuff. It is enough if you just straight away file your return of income. You don't have to fill any of these boxes. These boxes are meant for people who don't normally file the return of income, who have income less than the amount chargeable to tax, they only need to fill up these details. A normal assessee who's regularly filing the return of income, he need not fill these details at all. So what are the critical changes in house property? I told you about co-ownership, but one other important one is regarding brought forward loss of house property. Where you have any brought forward loss on income from house property, you can no longer file it in ITR 1. Can no longer file an ITR1. Why this is important, I will tell you. Practically, you will all be facing this scenario where many people, they have taken loans for their house property for almost 15-year loan, 20-year loan, 25-year loan, like this. Many people have taken long period loans for purchasing the house property. And especially houses which of a certain high value, if they have purchased in the last 10 years, then the value of the house is definitely going to exceed 60 lakhs, 70 lakhs. When it exceeds that limit and you have taken a loan, naturally your interest amount that you are paying per year on your EMI, etc., everything put together, aggregate of your interest paid during a year, very, very likely that it will exceed rupees 2 lakhs. Now, till 2 years back, this was no problem. Why? Because your loss from house property, you can set it off against the income from other heads of income without any limit. So if I have a loss from house property of 10 lakhs, I can set off that entire 10 lakhs against my salary income, my other sources, or any other income that is there. There's no problem there. It is very, very clear. The act allowed you to do that. But 2 years back, they brought a restriction saying, yes, yes, you can set it off against other heads of income, but maximum up to 2 lakhs only we'll allow you to set off. Highly restrictive amendment this is. I'll tell you why. Because many people, when you have taken a loan, when you have made your borrowings, in that time, they would have planned for their taxes so that some tax saving at least we can have. You're having actual outflow for your interest paid on your house property, but from the tax saving point of view, they are restricting. They're restricting it, saying out to 2 lakhs only you can set off against other heads of income. In my view, it's a very, very harsh amendment and it is causing a lot of inconvenience to people. But the fact remains that many people now, because of these amendments, especially over the last 2 years, they'll be having many carry forward loss from house property. Earlier, they would have set it off, no, against other heads. Now they cannot set it off. What will they do? You can carry forward. House property loss can be carried forward for up to 8 years. So therefore, please note, if your assessee has any carry forward loss that you're going to be adjusting or you're going to be carrying it forward, you can no longer file ITR 1, you must file ITR 2 or ITR 3 as applicable. So please be very, very careful here and ensure that these details you are complying with. As I told you, if you file the wrong ITR, it will be treated as an invalid return. And co-owners also we have already covered. The next critical point relates to one new schedule called Schedule DI. This pertains to actually the corona impact. Because you're all aware, normally for assessment year 2021, when you should have made your ATC deductions, by 31st of March 2020 was the last date for you to make all your deductions. That is your ATC, PPF, Mediclaim, LIC, all of these you should have done by 31st of March 2020. Unfortunately, on 24th of March 2020, our country went into a lockdown because of Corona. And still today, we are still feeling the effects of lockdown. A lot of talk is there that we are going to have another lockdown soon because more than 30 MPs have tested positive. If you have been following the news yesterday, they are going to cut short the parliamentary session, the Lok Sabha session because of this. So the Corona impact still persists. So I think the government have also acknowledged this, where they have said that yes, Corona impact is there. So they extended the time for your ATC deductions, your ATD deductions. They extended it first to 30th June, then they extended it up to 31st of July. So up to 31st of July, you can make your investments in ATC, ATD, etc. and claim it for the previous year itself. So there's a lot of confusion here, and they made this announcement. They made this announcement sometime in April. So there's a lot of confusion saying, what should we do? What should we do means in terms of if I'm someone who makes my investment in PPF in April first week, then I'll be little confused saying that if I'm making the investment in April, will it be considered now in the previous year or will it come in the next year? Because previous year already April of 2019 itself, I made the investment for financial year 1920. Now that they extended this time up to 31st of July, that does that mean if I invest in PPF till 31st of July, it will be included with financial year 1920? There was a lot of confusion. But no need for confusion. No need for confusion. It is very, very straightforward. It is very straightforward. If you look at the form itself, they are saying up to 31st of July, if you invest, you can claim it and go, no problem. No problem. If you claim it, you can enjoy the benefits of this up to 31st of July. And that you can categorize over here. So suppose your client has made an investment in PPF after April. He has made an investment that is after 31st of March 2020, but pertaining to the previous year, then you can continue to claim that in the previous year and enjoy the benefits of that. You just have to show when it is invested, whether it is invested after April or whether it is invested before April. As long as you do that, you are satisfying the requirements to claim your ATC deductions or your Chapter 6A deductions. So this is that schedule under which you have to fill these details. The next is a very new schedule. It's called the 80D schedule. You see, this 80D section has been a huge challenge for the department. It has been a problem child for the department. Many of you must be aware that I've been interacting very closely with the department and CPC as well as especially the faceless assessment. I have been, giving regular suggestions, part of the high power committee, which is steering this process. So right from the implementation, I've been working very closely with them. So during this time when I was working with them, a lot of issues that they are facing also came to light for me. So obviously I am going to be representing what are the challenges as chartered accountants that we are facing. But it was the first time where I got an insight into challenges faced by the department also at the processing stage. So one very common issue that they faced at the processing stage was pertaining to section 80D. You see, 80D relates to Mediclaim. If you look at the section itself, up to 1 lakh you can claim under section 80D. Up to 1 lakh you can claim. But there are many clauses. So you have to be a senior citizen. Your parents also, you should be paying for Mediclaim. They should also be senior citizens. Only then you can claim up to 1 lakh. If I'm an assessee who's 28 years old and I'm maybe I'm working at a very, very high paying job. I'm working at a high paying job and I'm not even married. I don't have any family. I'm not paying the Mediclaim for my parents. I'm only taking care of myself. In that scenario, my Mediclaim premium might be even 75,000. It might be 75,000. I may be taking short policies which give a lifetime benefit, that sort of policy. So my Mediclaim, in my case, I'm paying 1,75,000. I'm paying as my premium for my Mediclaim only for myself, not for anybody else. I'm not even married. I don't have a wife. I don't have children. I'm not paying for my parents. So I'm not paying for anybody. They're not senior citizens. I'm not paying for them. I'm also not a senior citizen. In fact, I'm only 28 years old. So in this sort of scenario, where I'm paying Mediclaim of 1,75,000, what used to happen, I'll tell you. Few years back, 3 years back, you would have seen this 80D alone. Every year, there has been changes in the ITR form. First, what they used to have, single line item saying 80D, what it is, you have to fill it up. So then what they did, people used to fill, especially many articles. I'm sure as CAs, you would have faced this problem. While CAs, we are familiar with the provisions of 80D. Articles and all, they are not very familiar with the 80D provisions. And they only 90% of times, they are the ones who are filing the ITR forms. In 80C section, if I've invested PPF, PF, everything put together comes to 4 lakhs. When I type 4 lakhs, the system will automatically restrict it to 1,50,000. But in 80D, when it was a single line item, in this assessee case that I gave you, the example of the 28-year-old, he has paid premium of 1,75,000. So if I type 1,75,000 as per the medical bill, as per my Mediclaim receipt, then in that case, the system will compute maximum amount acceptable at 1 lakh it used to calculate. That is the highest level. As if the assessee is a senior citizen, he is paying for his family members, he is paying for the senior citizen parents also. Up to 1 lakh, it will automatically calculate as at the highest level it used to calculate. But actually, how much can this boy claim? 28-year-old, how much can he claim? he can claim only up to 25,000. You cannot claim more than that. He can claim only up to rupees 25,000. He cannot claim more than that even if he wants to. Even if he wants to, he cannot do it. But look at this. Because of a mistake in the ITR form, he was claiming 1 lakh, and the system also used to process, refund also used to be issued. So this was happening very, very commonly at the department in many cases. So then what they did, they said, let us bring 3 breakup. We'll put lines for yourself, for your parents, like that we'll put. What people did, they used to fill everything in the first line item and claim again 1 lakh. They used to claim, put 1,75,000 there. They used to claim it and go. Or they'll break it up in each and they will claim it. Then department further next what they did, they brought a drop down button. They said you have to click the drop down button and fill it. So people, they used to select the maximum whatever is claimable. They used to take that drop down button and they used to fill 1,75,000. It will calculate as 1 lakh. So still, lot of these problems were regularly happening for the department. Then suddenly this year, they have said for 80D, we'll put a separate schedule itself. They're putting a separate tab. If you now go to your income tax returns, 80D is now a mandatory schedule. Even if you have no mediclaim, your client has not paid any mediclaim, zero mediclaim, then also you have to fill up this schedule saying I have not paid anything, 0, 0, like that. You have to fill and file the return of income. Therefore, it's a new schedule which you have to fill up very, very carefully. But this schedule reduces all the challenges for the department. If you are a person who has a family member who is a senior citizen, that is excluding your parents, then you have to select, you can claim up to 50,000. If you say no, then up to 25,000 only you can claim. Then whether your parents are a senior citizen, are you paying for your parents? Then you can claim for them also up to 50,000. If not for them, only up to 25,000 you can claim. So this is a very, very interesting development, but it's a mandatory condition. You have to fill this 80D tab if you want to complete filing your return of income, even if mediclaim is 0. See, as I told you, if you remember at the start, if you are a director, you cannot file ITR1. If you are holding unlisted, you cannot file ITR1. Why? Why can't you file ITR1? The reason is on your screen. Now, every other form relating to individual other than ITR1 contains these details. These are mandatory columns that you have to fill. Are you a director in a company? You have to select yes or no. Then you have to give name of the company, type of the company, PAN number of the company, whether it is a listed or unlisted company, and how many shares you are holding, how many years you are a director, your DIN number. All of this you have to give when you are filing the return of income itself. Suppose you say, sir, my client is not a director, sir. He resigned as a director, but he's still holding unlisted shares. No. So in that case, look at the column below. You have to fill more details. What and all you have to give? Name of the company, type of the company, PAN number of the company, what is the opening balance of shares? How many shares does he have? For what rate he purchased it? Whether the face value of the share and the purchase value are the same? Is it the issue price? Are they different? During the year, have you purchased any shares? Have you sold any shares? Finally, what is the closing balance number of shares that you're having? What is the value of these shares? All of these details are now sought for by the income tax department. So therefore, please remember, the reason why I am telling you this is because you have to collect these details from your clients. I told you, if not, it will be treated as invalid. Please remember to ask your clients and collect all these details from them. You're going to play a very, very critical role in data collection. I told you at the start, the changes are very, very few changes, but they have some impacts on our role as an auditor over there. So collection of data becomes very, very priority. We are all familiar how, if they say return filing date is 31st of July, 60% of the clients, they will come last week of July only. So therefore, you may be rushing. You will have so many clients who will be waiting to file the return of income. So you will have to collect all these details from them. It will not be readily available. They would have forgotten about it. So ensure that you collect the details from them. You keep some buffer time. Before you start filing itself, include this in your checklist. In fact, I think let me share my checklist with all the members probably after the program is over. I will share my WhatsApp number. You can just leave me a message and I will share my checklist with you. Keep that checklist. Ask each client who's entering your office to give all those details, or tell your article, tell your staff, somebody in your office who's a junior, tell them to check with their clients whether they are satisfying all these items in the checklist, And if they are satisfying, get the certain additional details from them. So this is a very, very important thing, so that in the last minute, suppose you are filing on 30th of November, then in that case, you should not be taken by shock. Oh, he's a director in a company, I don't have his DIN number. Oh, he's a director, he's holding shares, I don't have details of the shares. So you need to avoid these sort of problems that you might face. Next is, of course, this development where the tax audit limit has been increased to rupees 5 crores in certain cases. And in those cases where your cash receipts or your cash payments does not exceed 5% of your total cash receipts or payments. So here the only critical point that I have to tell you is that you have to select this and upload these details. But the most important point is your cash receipts or cash payments does not mean your cash payments. It does not mean your revenue payments or your revenue receipts. They are not talking about sales. When they talk about cash receipts and they talk about cash payments, they mean all your cash receipts and all your cash payments. If I purchased a motor vehicle, or maybe I purchased it for 1.5 lakhs and I purchased it using cash, then that also needs to be included, even though it is a capital transaction, even though it's a capital receipt, it's a capital payment, it's a capital outflow. Even in these scenarios, despite that, you have to include it for the calculation of this 5%. It is not only revenue items, it is your total cash flow. It is your total cash flow. Therefore, when you are filing your ITR 3, this is something that you will have to additionally disclose, whether you are filing under this provision or otherwise, because your tax audit details will get affected. The next important change was regarding the taxation scheme, 115 BA, BA, and BAB. This is basically the provision you're aware. Last year, the Honorable Finance Minister in October, she had announced that we are launching a new tax scheme where if you are a new manufacturing company setting up in India, then you will have a tax rate of 15%. 15% tax rate you will have, one of the lowest in the world. And if you are other than a manufacturing company, you can set it up at 22% rate of tax. So individuals are paying 52% tax and all at supercharge, but companies now they can pay 15% tax and they can file their return of income. So therefore, if you are opting for this scheme, then you have to accordingly tick these columns and fill the details regarding that. Details of KMP. So when you are filing a return for a company, you have to file the key management person, they'll be filing. The only key point here is the one word. When they're asking for the details of who are the key persons, they ask for details of eligible persons. So why this eligible persons important is some of you may be filing for companies which might have been struck off by the ROC, or the directors may not be eligible directors. They may be ineligible directors because they have not complied with the requirements of the ROC or the MCA. So therefore they have to go to NCLT and get themselves restated. So in that case only they will become eligible. So if they are ineligible, you can avoid filling this, but the DIN will be anyway inactive in that case. So it's only a very small point. I just wanted to point it out in case anybody is little concerned about the technical point of it. The next one is very, very important. Details of shareholders for unlisted companies. So therefore, look at this. If you are an unlisted company, you have to fill out the details of name of shareholder, residential status, how much shares does he hold, what is his PAN number, date of allotment, face value of the share. All of these details you have to fill if you are a company, and the details of your shareholders. Now, many of you might feel, Abhishek, this was there last year also, I have filled it. You might have filled it correctly, but 90% of the cases I've seen, especially the cases referred by chartered accountants pertaining to companies where we have gone on appeal. Generally, what I do is I take out the ITR and I take out the computation statement, everything I go through before I go and represent at the ITAT. So when the auditor refers the case to me, when I'm going through the ITR, I find in many cases, they don't fill the details of the shareholders. Instead, what they fill is ZZZZ, 1, 2, 3, 4, ABC, like that they will just fill and they will close it off. Now, traditionally, this was not normally checked and it was not a problem. Why? Because if I have a large number of shareholders, in fact, there are certain companies where you have more than 1,000 shareholders, etc. In those cases, it is impractical to sit and fill the entire list of shareholders. So therefore, in these scenarios, I can understand why people did that. But please remember the new development. Please remember the new development. Once again, I'm repeating to you, e-assessment is a game changer from the department side. Why I'm saying that? is because now when it's under e-assessment, if it was under physical assessment, if they pick it up for scrutiny or they asked for information, I can go and furnish the details of who are the shareholders to the physical assessing officer. Now when everything is online, they are expecting that if these details are expected in a return of income, then you must fill it out in the return of income. Don't come later and say that I will give you now, sir. Why you filled ABC? Why did you fill ZZZ? Why did you put 1, 2, 3, 4 like that? Please fill these details correctly. Otherwise, it could have certain other repercussions. If your assessing officer, whenever it is picked up in e-assessment, it is going to be assessed by somebody somewhere in India. When they are assessing it, then in that case, if they are kind enough to say, okay, I'll give you an opportunity to give the details, then no problem. But if you get an officer who is saying you have been filed incorrectly, I'm going to initiate action against you. I'll initiate penalty. I'll initiate prosecution. All of these things, if you start saying, then you are in for a problem. So please try to disclose correctly. Please ensure that if you have the details of who are the shareholders, definitely fill it up. Don't take the shortcut. It is better that you fill rather than get into problem later on. Next one is a very, very important one, and it's a very, very irritating schedule, as if I can say. What is the schedule? Is details of long-term capital gains on sale of shares. You're all aware, Section 10, subsection 38 allowed you to claim your exemption on your sale of long-term shares, long-term capital gains on sale of shares, which are traded on a recognized stock exchange where STT has been paid. It was completely exempt. Then recently, 2 years back, amendment came saying up to 1 lakh only will be exempt. Beyond 1 lakh, it will be taxable at the rate of 10%. So it's an unfortunate change, but it's a change which is there today. So when that is the case, what is the impact of this amendment? Last year, when we were all filing the income tax return forms, there was one very irritating schedule called 112A, where they ask you for name of the share, number of shares, when you purchase these shares, what was the value that you purchased the share for, what was the fair market value of the share on 31st January 2018, what was the highest value of the share on 31st of March, 31st of January 2018. So all of these details you have to sit and you have to fill it out. So if your client is traded in 70, 80 transactions during the year, 70, 80 line items, you have to sit and fill like this ISIN code, etc. So last year, I had made a representation and they had luckily accepted it last year, where they came out with announcement saying, no, 112A is optional this year. You don't have to file. So obviously, if anybody is given the option, nobody is going to sit and fill it. But this year, unfortunately, they have not said it is. They have not said it is optional. They have not said it is mandatory, but they have not said it is optional. And we all know, based on our experience, that whenever department says something is not optional, most likely that means it is mandatory. So when that is the case, it makes it mandatory on our part to sit and fill out this schedule this year. And let me tell you, ladies and gentlemen, it's a very, very tiring schedule to fill, especially more so when they are trading in shares and mutual funds. If you are trading in shares, at least that ISIN code you can Google and get the details. But if you're trading in mutual funds, many famous mutual funds, the ISIN code is not easily available online. If you Google it, you will not be able to find it. So therefore, I did it for a few of my clients now, where the mutual funds are searching. I could not find it anywhere. In my entire office, they spent almost 2 hours trying to find the ISIN code without asking the client. So then finally, we were forced to ask the client. We said, you're traded in these mutual funds. Yeah, what is the ISIN code? He asked his broker. His broker said, I don't know. I have to ask the company. So then he asked his company. Each company had to share the ISIN code. By the time he had given us the details, and by the time we had done the search, by the time we had asked the client, by the time the client checked and he had asked the broker, by the time the broker checked with the mutual fund company and gave us the answer, it had almost 7, 8 days had elapsed. So therefore, this is one more important point for people who are filing in the last minute for your clients. The ISIN code for shares is easy, but the ISIN code for mutual funds is not that easy to find. It is very, very difficult, and ensure if your client is giving you your mutual funds details, even if it is easy to find mutual funds, insist to him to get from the broker, or if he is dealing directly with the company, ask him to get the details of the ISIN code from the company for that unit of mutual fund. then only you will be able to file this, because it will autofill the name. Moment you put the ISIN code, the name of the unit, the name of the share, it will automatically populate over there. And then the balance details you have to sit and type it. But in my view, I don't like this schedule at all. I think it's a very cumbersome schedule, very time consuming. And in my view, it is the duty of the assessing officer to sit and inspect whether the details are correct or not. Whatever capital gains details I put here, he can check on scrutiny whether it is correct or not. In fact, I'll show you the next slide. Why this is a very important slide, why you need to fill it up. And if you don't fill it up, why there will be a problem, I will tell you in the next slide. Is that if you are following the news, last month, CBDT and SEBI have signed an agreement for exchange of data. Remember, I started off the PPT with all the agreements they have signed. This is one more agreement they have signed. I specifically put it here, I'll tell you why. Because now if we don't fill that, or we fill it incorrectly, in a single line item, I'm putting some amount. If I don't fill anything in that column, I cannot claim that 1 lakh. So if I fill that everything only, I can claim up to that 1 lakh exemption. So therefore, if you don't fill it correctly, now CBDT can check the information with SEBI and say that you have not provided the right information. You have not given everything correctly. So that is the scenario. Please remember here that the entire purpose of having that schedule as optional will be lost. It is no longer optional, it is mandatory. But here I want to make a point. This is a submission that I made, a representation I made to the CBDT. I told them, sir, no, till last year, you did not have an information sharing agreement. Now you have an information sharing agreement. Why should we sit and fill the details? If you have information sharing, let it auto-populate, or let me file the return. You check with the SEBI whether the details are correct or not. Don't ask me at the time of filing the return of income as an auditor or as an assessee to sit and fill out all the details of my transactions. It is a cumbersome practice. And if you are saying it is not mandatory, it is optional, why you are making it optional at all? Nobody will take that option. It is not something which is very enjoyable. It is a tiring schedule where if you fill even one number wrong, entire calculation will become wrong. For everything, I have to do a search. It is not easily available information. For everything, ISIN code, I have to search. Face value of the share, I have to search. Highest value on 31st of January, I have to search. All of these details, I have to sit and search and pull out the details. It is not easily available. And now that you have an exchange sharing agreement with SEBI, I said you must auto-populate the details, or at least allow us to file the return. You can check later on at the time of your assessment, at the time of processing. You check at that point of time. Don't tell me at the time of filing I need to sit and do all this. It is a highly tiring practice. So let us see next year how they take this. But for the current year, that 120A remains, and it remains mandatory. So we have to fill it as it stands. We have not got any update saying it is optional. Now we have to also give foreign assets. If you have any clients who are having foreign assets or foreign income, now we have to share details of the zip code of the foreign asset also. Why this is important? Because you'll see in the next slide that now the form 26AS, we are all familiar with form 26AS. Well, traditionally, it has been for what income earned, what is the TDS deducted, and then finally any advance tax paid, self-assessment tax. All of that will be reflected in your 26AS. Slowly, more and more information has been coming in the 26AS. And in the last year budget, our Honorable Finance Minister, she had announced, saying she wants to make the 26AS like a passport for a taxpayer. It is going to be a taxpayer's passport. Like that, they have a vision to make it. So when that is the case, when they want to make it a passport, what do they mean by that? It's a very, very vague term, no? When I say passport, the passbook, all of this I'm saying, what does that mean? It's a very, very vague term. Let me tell you what it means. That means the 26AS now is going to be an income tax passport with all kinds of variety of information about the assessee. It is not going to be restricted purely or merely to a few aspects. It's going to cover many more things. When I say many more things, what do I mean by these many more things? Sir, look at all the details that is going to be sought for in your passport or your 26AS now. It is no longer an taxpayer statement. It is going to be an information statement. It's called an annual information statement now. And this information statement is going to have information as per your DTAA, your double taxation avoidance agreement. or your tax information exchange agreement, your TIEA or your DTA, all of these details will now come out in your 26 AS. So therefore, if I have foreign income, maybe I have an asset in the US and I'm paying property tax on it, I've let it out for rent, but I'm not disclosing this in India. I'm an Indian citizen, but I have a house there. I'm not disclosing anything in India. Till now, I used to escape, no problem. But now, the US authorities will share this information with the income tax authorities, and our Indian income tax authorities, they will have details. Oh, you have a house there, is it? Where is it? Please show me your income schedule. Where have you shown this house? Foreign assets, there's one schedule, no? Where have you filled it? You've got rent. Where is your foreign income? Where have you admitted? Please show. So you'll be struggling there to explain these points. So please remember, be very, very careful, especially where you have clients who have studied abroad or worked abroad. They would have purchased shares when they were there, or they may have had bank accounts or even PF accounts, PF, whatever LIC, PF, that equivalent, what is there in the US or UK or wherever they studied, they may have had all of these balances and assets over there. If they are not disclosing that, ensure that you disclose it this year at least. Because if the information is shared by those authorities and it comes to our income tax authorities here, then you will be facing a huge challenge where the information now will be used by the income tax authorities and you will be in major problems. So please ensure that you are disclosing all of this. The next critical point, details of pending proceedings will come. Now, this is a thing that many auditors have told me, especially when I'm handling the appeals for certain cases and the penalty is initiated against the quantum. First, the quantum is passed. We have gone on appeal against that quantum order. CIT appeals or ITAT appeals, the case is pending. So when I'm handling the case, I used to tell when the penalty notice comes, I will tell the auditor, you please inform the assessing officer that that it is a appeal is going on. So please keep the penalty in abeyance, keep it pending. So the auditors used to do this. But very often I have found, practically also, it is a very funny thing, but I've seen this very commonly. Even though case is over, if you have won the case or lost the case, whatever it is, if you have won the case, naturally they'll go. If the case is lost also, many people, they used to go, assessees also, they used to say, please keep it in abeyance, case is pending at ITAT. Many assessing officers, they will believe you, they will not accept for further details. But the hearing would have completed, it would have finished, order would have been passed. But they will be saying pending, pending, pending. Finally, time barring date will be there. And time barring date will be over, penalty order not passed. Finally, when they're passing penalty order, auditor will say, sir, actually time barring date over, you cannot pass the penalty order. That appeal over, sir, it is not pending, we will say. So therefore, please remember now, you can no longer do all that. The details of all your pending proceedings will be notified in your 26 AS. Details of all your completed proceedings, that will also come out in your 26 AS. Information of any demand or refund. Many of you will be facing this practical problem where suddenly this year, your refund, you are supposed to get 1 lakh rupees, but you are getting only 60,000. When you go to investigate, they will say we have adjusted it against 2006-7 demand. 2006-7 one demand, they would have adjusted now. If you ask the assessee, he will say, sir, I have not got any communication. No demand has been raised against me for so many years. No notice has come. Suddenly this year when I'm getting refund only, they're adjusting. You said I will get 1 lakh as refund. You as an auditor, go and collect and come, they will say. So you will go meet the assessing officer. He will say, no, CPC have done it. If you write to CPC, you will not get a response. All of these are practical problems which are faced by us. So now this is again one good change which has come in the 26 years. Information of all your earlier demands and refunds will come out in your 26 years. So therefore, that means if last year no demand is there, and this year suddenly you are finding a demand raised in your 26 years from the department side, then there must be an order or a communication to back that up. If there is no such communication, then the demand is invalid. They cannot say last year we didn't put it, this year we have put it, we have missed it out. They cannot do that anymore. So this way, this will bring some onus on the side of the department. It's a very good change which has come out here. Cash payment of credit card bills exceeding rupees 1 lakh. If you're paying your credit card bills by cash exceeding rupees 1 lakh, that will also come in your 26 years. Where you're investing in FDs, mutual funds, shares or bonds or debentures, this will also now come if it's exceeding rupees 10 lakhs. Many FDs and mutual funds especially now gets featured already in your 26 years. In that annual information statement, there is one point where if you have made an investment in mutual funds or ELSS, REC, all of these details, it will come over there, even if it is 1 lakh, 2 lakhs. But even now, mutual funds, shares also, your fixed deposits also now will get notified in your 26 AS itself. Receipt of foreign exchange currency, if you're getting foreign exchange currency in excess of rupees 10 lakhs, that will also come. And expense in foreign currency through your cards or check exceeding rupees 10 lakhs, that will also feature. Now, the whole critical point of these points, why I'm specifically raising this, many calls I've been getting from chartered accountants, especially this year. I think for many people already, they are seeing the effects of this, where now in the 26 years, all of these transactions are getting notified. This year itself, it has got notified for many people. And many people who have called me and asked, this has been notified, sir, what should I do? Should I disclose it somewhere? Now, if I invest in a FD, it is not an income. I don't have to disclose it. Okay, if I'm a business person, then it will come in my balance sheet. At least I can disclose, no problem. But where I'm a salaried assessee, or where I don't have to disclose the details of my assets, then in that case, where do I disclose? It has been notified in 26 years that I have invested in a FD of 50 lakhs this year. So where should I disclose it? You don't have to disclose it anywhere. It is only an information statement. But please note that you have to be able to explain the source. I cannot be a person who is getting an income pension amount of 1 lakh per year, and I cannot make a FD of 50 lakhs if I can't justify where I got that source to make that FD of 50 lakhs. It is a simple question from income tax side. Sir, your total income, your average income for the last 6 years has not exceeded 1 lakh. So every year only 1 lakh you got. Assuming you have no expenses for the last 6 years, then also your total income is only 6 lakhs. How did you invest 50 lakhs in FD this year? Then you can say, I got a gift from my son. I got something else. I've sold a land. If you sold a land, where is it? They will ask. So all of these issues will come up. So you should be able to justify the source where you're getting these details, where the details feature somewhere, then you must be able to justify the source of this income. So that is the purpose. That is the purpose of this. It is not a disclosure point of view. It is from you being able to justify the source. So please note that is the most important development here. The next very, very critical point is something that has developed last month. In August, mid-August, our Honorable Prime Minister of India had a very, very grand announcement. You must have seen the announcement called Honoring the Honest, Taxpayer, Transparent Taxation, Honoring the Honest, where they announced very, very three important developments: e-appeals, e-assessment, and of course, one was the taxpayer charter. Along with that, many other important developments came. They expanded this SFT, or rather reporting of specified transactions. So what and all are covered in this? See the sort of limit extent that they are covering. All of this will come in the 26 years. So all of these details will now be available with the income tax department. Payment of educational fee and donations exceeding rupees 1 lakh. Electricity consumption exceeding rupees 1 lakh. Any domestic and business class air travel. For payment to hotels exceeding rupees 20,000 in the year. Purchase of jewelry above rupees 1 lakh. Deposit of credit cards and current account exceeding rupees 50 lakhs. Payment of property tax exceeding rupees 20,000. Life insurance exceeding 50,000. Health insurance exceeding rupees 20,000. Share transactions. So all of this will now come in your 26 years, will be available with the department as information. Therefore, be very, very careful. So they are going after people who are not disclosing. So now earlier, they used to go after the income. If you didn't disclose, they used to do survey, search, etc. Now what they are doing, they are going after the other party. If you are going to Harvard School of Business, then if you are not able to justify how you paid the fees, then you will be in a problem. But then earlier you used to think, how they will know I went to Harvard? They cannot find out. No. How will they know that I went to Harvard? Unless I disclose it somewhere, they are not going to know. But now they will know, because the educational institution, they have to share the details. I've received more than 1 lakh from XYZ people. These are their PAN numbers. So then they will ask, that's the student PAN number, who has paid it, who is their parents, are they filing their incomes, what is their sources. So therefore, this is going to be a game changer from department side. So therefore, as assessees and as auditors, we must be aware of these changes. So this has yet to be notified. This was announced on 13th of August by our Honorable Prime Minister. And after that, it is yet to be notified still. But the plan is by the next budget, mostly this will be notified. So by the time next year return comes, all of these details will be featuring in your 26 years, or at least it will be available in the hands of the assessing officer. So please be very, very careful. when you are filing the returns. I want to take questions, so I'm just going to quickly cover this CPC 2.0. I don't know how many of you attended the program that I had organized with the CPC. Is my screen visible, sir?
Yes, sir. Visible.
Okay, sorry. Some error came here. So anyway, so I don't know how many of you had attended the CPC program I had organized last week, where we had 8 officials. I had called 8 officials. The director is a very close friend of mine in CPC. For many years, I've been trying to get CPC to come and address our members and solve the issues. Luckily, the director this time and the entire team at CPC are very close to me. So I was able to call them and do a program where they did even live resolution of issues. The challenge with CPC that as auditors that we face is when it comes to the Income Tax Act, we can easily find out the issues because we have the Income Tax Act, we have the procedures, we have the regulations, everything is there, judgments are there, we can read. When it comes to CPC, there is nothing anywhere. If you want to read about CPC, where will you read? You don't know how CPC functions. You don't know what is their role. But then every time some issue comes up, you go to asking officer, he says CPC. You write to CPC, you don't get a response. So we are all stuck. We don't know how to answer the client. Many clients are waiting for refunds. Many clients have demands which are raised, but they are not resolved. Update is there on that income tax portal. If you go to work list, it will be there in the pending items. So these are all practical day-to-day issues that we are all facing when it comes to CPC. So how many of us know what CPC do? So therefore, that program which I had organized, CPC had come, they explained for each issue. Demand means what we should do, refund means what we will do, in this case what we do, what does CPC do, how is CPC split up, what are the teams, how they function. All that was covered, including live resolution, where I had circulated a form, a Google form, where if you shared your PAN number of your assessee and the issue, they resolved it on air, live when the program was going on, they resolved the issues. So this is a very, very wonderful session that we had, and it was very well received. During the course of the session, they had announced, they had shared one beta testing that they're doing. So there is going to be a new thing called CPC 2.0. It's called CPC 2.0. And trust me, ladies and gentlemen, this is going to be a total game changer from our work point of view also. Why I am saying that, I will tell you. See, till now, we have to all admit as auditors that the ITR filing process is complex. It is not easy. Even if your assessee knows his income taxes, even if he has only Form 16 income, still if he has to upload and file the return of income, it is not that easy. It's a little challenging because identifying the details in the form, filling up all the schedules, all of that is not that easy. It is not user friendly. And the department also, they have realized that it is not user friendly. So now what they are trying to do is they are trying to make it a user friendly approach so that assessees themselves can file it. So they are saying we'll pre-populate all the details, including all the schedules, all the heads of income, everything we'll pre-populate. We'll do immediate processing. In less than half an hour, your return will be processed. In less than 1 hour, your refund will be issued. And they are going to do a call center. When you have complaints against Jio or Airtel, you have a call center. If you call them immediately, there's like a BPO. Someone answers, they will say, sorry for the problem. We'll immediately resolve it. And in less than 1 or 2 hours, you will have a solution for your problem, or it will be escalated to the next level if it's not resolved. So all of these options you have when it comes to your any private company. So department now they have said, we also want to operate like this corporate process. So they are going to set up a call center. They are going to set up a virtual assistant. They are going to set up social messaging platforms where if you write it on Twitter, you write a tweet to them saying, I'm facing this problem. It is not getting resolved. Immediately they will resolve it. Like how a company, if you tweet, immediately they will take it up. They have a PR team. They sit and they only scrutinize all of this. So therefore the income tax has also woken up. They have also decided going forward, we are going to do this. We want to make it a user-friendly process for our taxpayers. So we want to make the process easy for them. We want to integrate it and we want to simplify the process. So this is the entire purpose of the CPC 2.0. In fact, I had requested the director to share what it looks like. So what you can see on the screen, this is what it will look like now. Your income tax filing form is going to be so simple. Personal information, it will all automatically fill. Your gross total income, single line item. You just have to go in and take the split up. Total deductions are there, tax paid, total tax liability or refund if anything. It will automatically calculate here in a very, very easy platform. So this is how the e-filing portal is going to look. And I am not, this is not a model thing. This is a beta testing stage it is already at, which means they have already designed everything and they are now testing out to see whether there are any problems, how it will look. If a taxpayer starts in using this platform, will he be able to understand? So therefore, please note that this is how the income tax is going to operate. So if you are an auditor who's not communicating to your client clearly, you might be facing a problem because the client himself now can communicate with the income tax. They want to make it a seamless process. Therefore, ensure that you are keeping the client updated and you're keeping the client happy. So this is what this will have an impact in our future of our profession. So please be little careful on this point. This is only between us that I can share this, but this is the development on the income tax side that I must definitely share with you on the CPC end. Because due dates, these are the revised due dates. Many of you might have seen yesterday a new bill has been tabled in Lok Sabha where they want to extend the dates even further. So this page might change, but as it stands, this is relevant. But from tomorrow onwards, that might be different. Lok Sabha is scheduled to wrap up by Wednesday. So if they want to pass the bill, they'll have to pass it in the next 3 days. So we might see a bill being passed very, very soon where they're extending the dates due to the corona issue. I think all of this. I think we've covered all of this.
Great.
So I've reached the end of my session now. I'll be happy to take questions. So if anybody has any questions in the chat box, etc., you can do. I've shared on my screen my contact details. My mobile number is there. So as I said, if you want the checklist or you want this presentation, you can feel free to leave me a message in WhatsApp. This number on the screen is my WhatsApp number. I'll be very happy to share it with you. And if you have any doubts also, you can feel free to discuss it with me either here or you can message on WhatsApp or email it to me. I'll be happy to take it up. So how do I take up the questions in chat?
Really, thank you. You can stop there.
Okay, okay.
Thank you very much, Dr. C.A. Abhishek Murliji. It's a spectacular throw of knowledge the last 1.5 hours. It's a shock and surprise for me. The starting point, the numbers which are joined, even one number also not out. Even in the CPE, generally people will come and go, but today's session absolutely packed, and whoever on Sunday want to take the joy of learning, they had the wonderful joy. And more than that, today, another more a special day, I can say that one of member of our Chartered Accountant NRI member, who's from Canada. You imagine Canada, time is the 12 o'clock. Still, he is in the life. And Manohar, Chartered Accountant Boga, I request Manohar Boga, my good friend, want to share some views on the program before we take a question and answers. I request Manohar to unmute and a few words about this program. Thank you very much and joining and Manohar, I request Manohar to unmute.
Yeah, hello everyone. Am I audible, Hemant?
Yeah, Manohar. Thank you very much. Thanks for
Okay, it is a big surprise. You pulled me in to talk something, and definitely why not? After attending such a great session, then if I don't share my views, it is not fair on my part either, right? So yeah, I'm very privileged. Hello everyone. Actually, this is Manohar Boga from Toronto. I qualified CA back in 1998. Okay, it's a long journey. And I moved to Toronto in 2002. So Hemant happened to be my roommate in Rayapeta. So I just, before just this session started, actually, I just called because it is Sunday and I wanted to just speak a casual call. And he told about the session which is going on. And he may have shown interest. Okay, why not? And he always puts me into this, whatever the updates and all that, right? Okay, I thought maybe I just connect and I will just get out in 10 minutes, right? But Abhishek's session is like, put me in such a tight position, and it is, I cannot even believe it is more than 1 hour. And believe me, I did not even miss just one word, what he told, right? It is great session without any doubt. And surprisingly, I just come to know he's a son of Mr. Murali, okay, whose accounting, if I remember correct, he used to teach accounting classes back in 1996. I attended, And I'm very glad to say that I'm attending Abhishek session again after like about 25 years.
But
You
for
know?
another 20 years, his son will come.
Yeah. Who knows? Yeah, definitely, like, this session is really excellent. And I can say, like, though I am away from Indian taxation and, I'm a good investor in the stocks and who covered, like, all the long-term capital gains and ISN code and STT exemptions. Everything is useful. Trust me. Even I am away for 25 years, it is a useful session. And the way it is explained on 26AS, like a DTA and ITA, everything is excellent. And the special, like a 139 section, he explained the seventh proviso. Even like expenses paid for the NRI son paid, and all these are really very practical. And I can say, like, when I came here, the taxation here in Canada is like used to be so advanced. And when I compare, now I can say it is the other way around. The India is even progressing much and they are in like a tighter control and all that. Here, the provisions are there. Trust me, even I don't, I don't disclose my savings, some earnings which I made interest even today. Okay, I just ignore. Okay, I will get like a T5A, the farm number. But okay, that's fine. It's only $25, $30, right? So I don't even disclose.
So kind of you, Mr. Manohar Boga,
Yeah.
for joining in this late
No,
midnight
excellent.
morning lights. So joining with us and share your experience and share your thoughts.
It's at 2 a.m. It's at 2 a.m., not 12 o'clock. Okay.
Thank you, sir.
I just want to correct. Yeah, I don't want to take much of everyone's time, and I want to give opportunity to
Thank
others.
you very much. Thank you very much. We'll go for the other question and answer sessions. I request members who are willing to take it up and just let us have raise hands and let us start our question and answers.
I saw some in chat. Should we start that, sir, or should we take?
Yeah, we can start from the chat box. I think Abhishek also can take few questions.
Yeah, I'll just quickly take from the chat box, and other members you can either put in chat box or you can unmute and ask also.
Yeah.
CA Madasamy sir has asked, ITR 6 is not yet received. What is the probable date of release? Why department is very reluctant in releasing e-forms and e-filing is mandatory? Excellent question, sir. Even I am asking that question only. Why they are taking so long to issue the forms? In fact, you are aware that there's a very, very unfortunate change, Madasamy sir, since you raised this point. They have said that where your self-assessment tax exceeds rupees 1 lakh, self-assessment tax exceeds rupees 1 lakh, then in that case, interest under section 234A will still be levied after 31st of July is what they have said. I have objected to this because it's highly unfair. Where the tax filing date itself is November, how can you levy your interest on 234A for delay in filing return of income? So therefore, there is logically there's something wrong there. Not only that, even if you assume it is okay, on 31st of July only, the ITR 3 Java form was notified. So what they are saying on 31st of July, I have to file all my returns of income when they are not notified earlier. So therefore, they have definitely been earlier. They notified all the forms in January itself. When you saw, you could Google it and you could take it out, the PDF form. But I don't know why there is so much delay. And but as you can see today, hopefully that Lok Sabha bill, once it's tabled and it gets approved, there'll be extension of dates. So then this will not be a major problem for us, sir.
I request Thiru sir to unmute and speak. I request Thiru sir to unmute. Mr. Thiru. Unmute. Mr. Thiru sir.
Till then, I will take another question.
Yeah, go ahead.
R. Swaminathan sir has asked if the directorship on a Section 8 company, whether that should be counted. Yes, sir. If it's a Section 8 company also, it is still a directorship. As long as you have a DIN number and you are disclosing it and you're filing the return of, you're filing your MCA details, you'll be including that. So definitely Section 8 is also a directorship. Even a club, Hindustan Chamber of Commerce, Cosmopolitan Club, all of this also, if you are a director, you have to disclose the same.
But is it is a non-pecuniary position? So how does that count?
Even otherwise, sir, they are not asking.
No, actually, I'm asking the relevance of the additional information.
Yeah, no, you're right, sir. Actually, you're absolutely right that it may not be a non-pecuniary. It may be a non-pecuniary.
No, the very purpose of this is a honorary position.
No, absolutely right, sir. I mean, I'm not debating with you here. I agree with you. But all I'm saying that is they are expecting these details. The reason, the logic is that some people are using it as an office of profit, and many people are doing that across the country. So in order to catch that, in order to know the background of the assessee, they are doing it. It is more of a, that is why I told you, the ITR changes, there is few, but the impact of the changes are larger. So the impact is they are trying to build a story around each assessee and understand more about him. So they're collecting data, and this data, as you know, if once they collect the data, it may not necessarily impact in addition, but in the future they may use it to build a case against the assessee. So that is the logic, sir.
Fine, thank you.
CA Mohan sir has asked the same analogy: if the amount is transferred to the parents and the parents pay the electricity, then who has to file the return of incomes? Whether the amounts are transferred, parents could use it for any other purpose, including electricity too. Sir, in that case, whoever is incurring, in this case, the person who's incurring will be the parents, so they only have to file the return of income. Questions in the chat. Let me see. Please share your PPT. Sure, sir, I will share. Always there is a delay on the part of the department to release forms every year. Correct, Swaminathan sir, you are absolutely right. Marasamy sir has said director is a director. Yes, director, irrespective of what nature, you are a director, straight away it's required. Any more questions? You can unmute and ask.
Yeah.
Hemant sir.
Sir, can you request the CPC to have at least on major state capitals to have a liaison office here so that many things can be sorted out. Because
Yes, sir.
whenever,
Yes, sir. I agree with you. You are absolutely right. And in fact, this is a representation I've been making for a while now, and it has been accepted very, very positively now. That is why I shared the CPC 2.0 with you, where currently how the CPC operates is that they have a separate system, and ITBA is a separate system. And when you go to assessing officer, they will say CPC, but they don't know what is happening. CPC won't respond. So a lot of miscommunication or gaps are there. So in the CPC 2.0, it's expected to be released sometime next year, sir. And at that time, it's going to be an integrated platform. So therefore, automatically, now that especially because e-assessment is there, especially since e-assessment is there, there has to be smooth functioning between CPC and e-assessment. They have said that it will be there, but it remains to be seen. We have to wait for it to actually happen to see how smooth it is, sir.
yes, thank you.
In the case of NRI cases, clients of especially
Yes.
NRE employees who are generally
Yes.
approach us for filing the income tax returns,
Yes.
they will show that they will, they will be comply the provisions of retaining that NRE status by keeping the days, and the bank account, at least the bank account details of the foreign nation, they don't want to disclose. So can you throw some light on that, Mr. Doctor?
Yes, sir. I think it's a very good question, Hemant sir. This is a more specific issue to US people, because you will not find this commonly there with other people. And I'll tell you why. The US taxation is a very, very peculiar taxation, where in US, the taxation is based on citizenship. In India, it is based on number of days, residential status, where if I'm in India up to a certain number of days, then beyond that, it is taxable. If I'm having a US citizenship, then in that case, my global income becomes taxable irrespective of whether I'm a resident in India or non-resident in India. So the residential status does not matter. Citizenship matters in your US. So therefore, many people, what they do is they do not disclose their incomes which are there in India. So it might be a simple thing: rental income, savings bank interest income. I'm filing my return here, but I'm still not disclosing all my income over here, even though I'm a non-resident who's situated in the US. When this sort of situation is there, this sort of circumstances are there, there are times that people have to be careful, because when you disclose the details here, you must disclose it over there also, because as I told you, global income will be taxable in the US for them. And if they don't disclose the details over there, the penal conditions in US are very, very strict. They're very, very strict. They even prosecute for small amounts. They may have to go for a settlement, etc. over there. So therefore, given the circumstance, we must only advise the assessees correctly that they must disclose it. Because you are absolutely right. And as both Swaminathan sir also said, commonly people, they skip disclosing certain information because they think it does not matter. After all, savings bank interest, after all, FD interest, anyway, it is below the taxable limit. In India, it is below the taxable limit. But check, if you are disclosing here, you have to ensure you are disclosing there also, because later on, it should not be a problem. Normally, the amounts are nominal, so therefore, it is not a problem. But my advice in general is disclose, so that once the amounts increase in the future, you will not make a mistake of not disclosing that.
Dr.
And one
Murli,
more thing,
once
yeah.
again, Dr. Murli, one thing, where, sorry, Dr. Abhishek,
Yes,
one
sir.
particular thing, where there is no DTAA agreement with the specific countries,
Yeah.
how do you think that the data can be populated or collected?
If there's no DTA, they have now 90% of the countries we have got DTAs. Very few countries we don't have DTAs. Those are tax havens. So for that, they have a separate procedure. So it is not going to be populated in 26 years. But whenever that sort of non-DTA company comes, they try to tax the entire income in India itself. So it becomes a more challenging issue in that case, where the assessee has to disclose or not disclose. It's a more complex issue there. And it happens only with the companies like Google, Facebook, all of that only it happens. Very rarely you're going to find in our assessee scenario. So if no DTA is there, we are very fortunate. It will not come in 26 years.
Okay, very good. Thank you, thank you.
In the case of 44 AD companies, we have yesterday I saw it in our group also. In the case of 44 client who satisfies the eligibility criteria.
Yeah.
So what's your view that whether, for example, they have an income of let's say 20%, and but they want to disclose 8%. Is it enough that if you disclose 8% is sufficient, or they are required to disclose mandatorily 20%?
This issue I have been hearing for so many years altogether now. So I'm only going to say what the Act says, because what practically people do is different. The Act, what it says is that minimum amount of 8% you should disclose.
Correct.
8% is a lower bottom set. It is not a ceiling. It is the bottom. So therefore, if your actual thing is higher, naturally they are saying you should disclose higher. But whether people are doing it or not,
if I'm showing regularly higher, then I'll go for ITR 3. No, why I'll use ITR 4? I'll not maintain the books of account. I'm maintaining only sales register.
Correct.
So since I'm not maintaining the books of accounts, I'm going for ITR 4. I'm disclosing 8% more or whatever required minimum, bare minimum of loss is. If
Correct,
that is the situation, whether is it required that mandatory? Is it mandatory? That's what we are trying to understand in the discussion.
See, that's the thing, sir. It is mandatory. But coming back to presumptive taxation itself, and see the rationale, we must always try to take a little step back and understand the rationale. This presumptive taxation, even the tax audit limit, why they have increased up to 5 crores. Many of you may be wondering. Last year it was 1 crore. By 4 crores it has jumped now. Up to 5 crores they have said no tax audit required. That is a very significant jump. Why is the department saying tax audit is there better for them? No. They get the comfort that it has been audited by some person. They can fix the responsibility on an auditor, and if they want, they can take action also against the auditor. So why they are saying up to 4 crores, no need tax audit? Seems risky from the department point of view. So why would department take a risk by increasing? The logic, sir, we must understand presumptive taxation and this. The logic is in their mind, they have enough information to, in these sort of cases, to get a comfort from the assessees. So presumptive taxation means they find it either not so important or they have enough information to handle on the assessee's case if they're going for presumptive taxation. And you all know presumptive taxation, almost every case gets picked up for scrutiny these days. Hardly any gets left out. So when that is the case, they have their own action to control and check whether it is correct or not. So they will also do their research on the side. If he is doing a photography business, then they will check with other photographers. What is the benchmark income? If they're doing any sales business, they will check what is the benchmark income in that industry. So they have their own methods. If you are lucky, you may get an assessing officer who does not do all this. But we must always go by the Act. 8% is a lower, bottommost thing. So what they are saying is you must offer at least more than that.
Yeah, I request Arunachalam sir. Any questions you can ask? Arunachalam sir. Senior member Arunachalam sir. Arunachalam sir, you can ask questions, sir. Unmute and speak, sir.
So, Hemant, this is Trivengadam.
Yes, welcome, sir.
Very good afternoon, sir. It was a very good, very great session, actually. Most of the practical, doubts which we are having, everything almost got clarified in filing the return. Thank you very much. In fact, 44 AD, I was about to ask. Mr. Hemant has raised that question. And we also take the same view. Just because it has been mentioned that, presumptively you can take 8%, even if your income is more than 8%, we cannot take the view that it is adequate if you just show only 8%. I think that should not be the intention of the department, actually. So that way, in fact, I was also having this doubt for quite some time. When I say the clients, they don't agree, because some people advise that it is adequate if you say only 8%.
Yes.
So now I am also clarified. Anyway, thank you very much. It was a
You're
very
absolutely
nice
right, sir. I think that's a practical issue many auditors face, where you file the return of income, you prepare the entire books of accounts and everything you do, and you file it. Suddenly he'll come back next year, or he'll call you after 2 months. He'll say, "My friend told me 8% I could have disclosed. Why you made me pay so much tax? Why you made me do so much efforts?" He said, "No need balance sheet P&L. Why you did all this?" So they'll not understand. It will get picked up for scrutiny. If you take presumptive for 5 years, you must continue. You cannot change. If you change, it is compulsory tax audit. So all of these conditions, they are not aware. They just hear 8%. They see that they have prepared books of accounts, they have offered 10%. So they get automatically, they get irritated. They think as if we have cheated them. But many people don't understand. So therefore, as auditors, we must definitely, anyone who's going presumptive scheme, we must advise them what are all the challenges, that it will get picked up for scrutiny, that you cannot keep changing back and forth, that you have restrictions. All of that, we must definitely advise them.
Next question,
Personally,
Arnav. Yeah.
Personally, one case when one Assi from Mumbai, he was just referring me. Then I told him this is what we do, and he didn't agree with me. Then he went back to his old auditor.
Yes, sir. I think
And
this is a big challenge, and I think they are all escaping because either through personal relationship with the assing officer or some other reason, these assessees used to get away. But now it's changed, sir. The old school style of approach has gone, especially with the assessment. Trust me when I say this. I've been closely involved in the entire implementation of faceless assessment, including speaking with CBDT officials, Ministry of Finance. Everyone is very, very serious about faceless assessment. The government is extremely serious. They want it to be a success. They are taking constant feedback. Every week we have meetings where we are giving suggestions to them on what are the challenges, what are the problem, practical issues. So we have a team of where we are representing the auditors. Similarly, someone is representing department. They have a principal commissioner. They have a REAC head who is explaining the data side. So you have different people from different sort of industries who are compiling the information. So hopefully going forward, you will not find the scenario where people are misguided and they escape action by inadvertence. That will not happen, hopefully. So that is the belief, sir.
I request
small
Manohar
thing.
to ask one question. Manohar.
Yeah. I have a question to Abhishek regarding the interest earnings on the NRE, non-resident external, which is 100% tax exempt.
Yes.
Of course, we need to disclose here.
Yes.
Is there any change, and do you see any threat? I know a lot of people they are earning like a huge amount of interest, and with the assumption that it is completely tax-free, and no one will file the tax, right? So I never filed either. So I just want to hear on you. Is there any changes are there recently, or how it is going to impact?
Yeah, they will not touch that, sir, because for them NRE amounts are very, very useful to government. Any foreign related thing you may have followed, or maybe you are not aware. But yesterday, if you were reading the news, they would have seen for taxation of dividends for FPIs, they have reduced it to 15% from
Oh,
what
okay.
was the earlier 37%. They have reduced it for foreign portfolio investors to 15% because
Oh, that's
anything that comes from abroad that is coming in dollars to the government, they will give whatever benefits that they can. So as long as you are getting NRE account, you don't worry. If you are a non-resident, it will be completely tax-free.
excellent. The question I asked, but I got the useful answer to me because I also have some portfolio, and I seriously impacted with that 30% taxation. But now I am glad to hear that it is reduced yesterday.
Good. So, any other questions, Thiru sir? Thiruvanam sir?
See, with regard to this provision for bad debts, what we generally do is at the time of making provision, we make a provision, and in the case of it is charged to profit and loss account, while preparing the statement, it is getting disallowed. And when we write it off subsequently, so is it necessary that we need to again write back the provision which has been written disallowed earlier and again show it as a write-off, or we can straightaway adjust it in the balance sheet and claim it in the statement of personal income, which is actually better?
So if it is something which has happened in the income tax records, it is only purely income tax thing, then it is not required. When you're preparing your computation statement, you can make that adjustment. It is not required for you to change your financial statements itself for that. Sir.
Subsequently, when I write it off, it gets set up in the balance sheet assets and liability itself. And just because it is not reflected in the profit and loss account, will the officer say that you are not charged with profit and loss account?
No, sir, because the income tax primarily pertains only to the profit and loss account. So the balance sheet are things which they use only to gain further information like movement of capital, sudden change in capital, etc. The balance sheet is not something the department primarily relies on. They rely only on the P&L account. So in my view, it is not required, sir. I think it
you
will
very much.
complicate things if you do that.
Thank you very much.
I think Madasamy sir has asked another question. Taxpayer Association should take it up with the department that ITRs and e-forms are ready by April 1st every year. Definitely, sir, we will do that. I think we actually, last year we had given this representation from the Taxpayer Association. Madasamy sir is well aware that we try to give representations, and this year they notified the forms in April, but March that lockdown went into, so we could also not give too many representations to the government saying give the ITR form, because the most of the representations were extend the date. So we did not want to say give the ITR form. But now the critical issue now, as I told you, is that 234A levy when the self-assessment tax is beyond 1 lakh. I find that, to be honest, I find it ridiculous that they want to even levy interest when the return filing date is extended. How can you levy interest for delay of filing return of income? So it seems very silly to me, and hopefully they don't do that. Hopefully they repeal this.
In fact, Java forms also not released for remaining 4-5 forms. Still not
Yeah, I think as I told you, 31st July only they notified itself for the ITR 3. How they are expecting people to file the return when you are putting it on the last day?
So in fact, Mr. Abhishek, we have August 15th, we have one session with a special session with the Dr. Girish Ahuja ji. So we can see the South Indian, you are watching towards Girish Ahuja ji style of presentations, and we have a good human resources, faculty for over a period of time. We'll see that there's a well progress in your deliberation, well progress in your matured in talking. So this is a time for, thank you very much for joining, and I request our deputy convener, sir.
I'd like to thank the organizers. I thank all the members.
One more
really
question
wonderful.
I think we can take from Swaminathan, sir, in the case of something question.
Oh, sure. He has asked a question in chat, I can see. In case of derivative deals and income generated, common practice is to accept the banker statement. But assessing officers are not accepting as they don't know what is a derivative deal. What is your views? So, this is the practical issue that we are facing. You can either go meet the joint commissioner and represent, but anyway, now it is e-assessment. And this is, I covered this in my e-assessment presentation, where they now have a technical team. The technical unit will be there, where if the assessing officer is incapable of answering a question, I'll tell you practical scenario that I faced. One case that I was handling, it was a company, it was a loss-making company, and they wanted to make additions. So he had come up with 5 additions. I was disputing those additions. Then he wanted some more information, the assessing officer. So I told him, sir, give me 3 days time, I will give it to you. So this auditor who was handling it, he said, you give me 3 days time. The assessing officer refused to give that auditor 3 days time. This auditor he regularly refers cases to me. I've been working with him for almost 10 years now. So whatever he says, I believe him. So he is saying 3 days time they gave. He could not give the details in 3 days time. 4th day he gave it. Assessing officer said, I am passing the order. So he passed a best judgment order, making addition saying, I'm going to assess it under section 44 AD for this company. I'm going to do 44 AD. So on the entire sales, 8% I'm putting and I'm making an order. Now I found that ridiculous. Why? Because everyone knows 44 AD is not applicable for companies. Companies cannot do 44 AD. So when I went on appeal, I had to just make one sentence. I won the case. Then I went to the background, seeing why he passed an order like this. That assessing officer, for almost 15 years, he was in the NPO ward, 80G cases he was doing. He does not have any corporate ward experience at all. So moment he has come here, straight away, whatever he knows, he has passed the order. It's a stupid order, but worked out in my favor. But unfortunately, like Swaminathan sir says, many assessing officers who don't know the provisions, who don't know the act, they are passing orders which are bad, which are really bad, high-pitched orders. All of this is happening. So this technical unit under the e-assessment team, you'll have experts in each area. Capital gains means one expert. Accounting standards means one expert. ICDS means experts. Similarly, like that, for derivatives, you will have experts. So they can make a reference to that team, and based on their inputs only, they will pass the order. So hopefully you will not have this problem in the future.
Thank you, sir. Thank you, sir.
Friends,
In the case of derivatives, you have to have the total gross only as a turnover. No, for the purpose of turnover, you have to consider only the gross. No.
No, now I think there is again a clarification that you can have even net, sir. You
Net,
don't have
net
to
only.
gross.
Sir, always it is net only, sir. It is
Net
gross is not your income.
Gross is not required. Net is enough, sir.
Friends, there are 2 announcements. Tomorrow, back to back, we have a tax audit seminar with one of the great faculty, Ramnath sir, tomorrow 4 o'clock. Number two, those people who are not still given their attendance, kindly put the very important thing, put your name and membership number in the chat box. So thank you very much, Dr. Abhishek Murli, and go over to our Deputy Convener, Bhaskar, for a formal vote of thanks.
Good afternoon, everybody. And it was a very wonderful session by Dr. Abhishek, our young son of legend V. Murali, who is also a close friend of us. So we thank you profusely for your wonderful and articulate presentation. And many of us have benefited by this. Only yesterday I filed my return. I could face all these problems. Now today I think I'm more or less justified by your own statement saying that the tax authorities, they try more simplification, they complicate only. And it's a really, as you said, some of the details called for filling, it's very, very cumbersome. I mean, hopefully our institute will take it up with the CBTT and try to simplify it. Thanks a lot once more. I would convey my appreciation and on my own behalf and on behalf of CPE. And we would like to have more interesting sessions in the future also. Thank you, sir.
Thank you
Thank
so
you
much,
very
sir.
much, Dr. C. Abhishek, for accepting this wonderful day. And Sunday, we will make your time. Thanks to all members. Thank you. Have a nice time. Bye-bye.